It's time for Top That Trade. A couple of big hearts right there for you. Trader Alan, he's the chief market strategist at bullseyeoption.com, and Phil Flynn, a Fox Business Network News contributor. Round number one, apple of your eye. Is Apple a stock to marry, a long-term buy, or date, a short-term trade?
Well, I've been an Apple lover for the longest time. For me, it's a belief stock, and, the $30 billion in pure profit each quarter, don't sway that. It's bullish. It may not move as fast as some of the other hero stocks, but I love the risk reward, the fact that it still has a lot more upside than a Meta, for example.
And Apple had disappointed. There was concerns about their sales in China being down, a lot of competition in China, and that's one of the growth areas. But that could all change. That could all change because of artificial intelligence. Apple is going to release its new version of artificial intelligence. This should give the stock a big boost. So I say, buy. It's the apple of my eye.
Round number two, we need to talk. Those are four dreaded relationship words. Would you break up with stocks, bonds, or commodities by reducing positions this year?
I think I would be heavy bonds in the beginning of the year and lighten them up later in the year, but I definitely think you should be stocks. I do think you should look at the artificial intelligence sector. If you're long the biggies, maybe lighten up a little bit and then try to look for the up and comers. And that's one thing that I've been focusing on in my portfolio.
As your resident bull market genius, I'm always bullish. There's always bullish opportunities. Nothing changed. We went up and I was bullish in 2023, 2024, and again in 2025. The fundamentals are there. Obviously, it's about risk reward. For me, it's controlling risk using limited risk options is the way I like to position. But there are plenty of opportunities.
Round number three, sweet versus meat. Cocoa prices are at a record high. Cattle herds are dropping to record lows, meaning less supply in the market. For you, what do you like, a sweet or a meat?
Well, I think they're both going to move higher. We've got the fundamentals. They've already had an extreme move, so that's when you got to be cautious. We've talked about taking profits, selling too soon if you've been long. But I like a combination of both. But the way I'm looking to play is silver. Now, when you get your chocolate, your chocolate kisses come in that little silverish package. So silver, I think, has got a lot more upside as far as any of these commodities go. Keep an eye on the silver to break out and make new highs very easily, just year highs. And then we're a long ways away from the adjusted highs. We'd have to hit $69.
I think it's getting a lot harder to be romantic these days, or at least a lot more expensive. I mean, you don't have enough of anything, right? When it comes to a romantic dinner, you don't have enough flowers because of the frost. You don't have enough. Chocolate prices are through the roof. There's not enough cocoa, and there's not enough cattle. We're in probably the most explosive bull market for a romantic dinner and everything, and maybe the lobster might be the cheaper option the way things are going.
On to your bonus round question for today. It's ticker time. The tickers that we have for you today are We Love You. Which one is not a true ticker?
We.
No, I think We Energies. We Energies, right? Isn't there a stock ticker? We Love You. I got to go with you. No, it's got to be love. No love here.
Love is Southwest Airlines, America's airline.
Oh, yeah, all right. You're right. I'm sorry. Yeah, I wasn't thinking. Okay, we got to go with you then.
The answer is We is not a true ticker. Alan wins this week, but we still get to say love you because those are true words. Business First AM will be right back with Trader Jane.
We all win.